found yourself confused about which mutual fund option to choose? You have probably seen two choices when investing in a mutual fund: growth and IDCW, which is income distribution cum capital withdrawal option. So what do these really mean? And more importantly, which one is the right choice for your financial goals? Today, we are breaking it down in simple terms so that by the end of this video, you will know exactly which option suits you best. So let's get started. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance concepts for individual investors like you. So the growth option in mutual funds is all about long-term wealth creation. So here's how it works. Instead of receiving periodic payouts, all the profits, dividends and capital gains are reinvested back into the fund. Over time, this leads to compounding, meaning your money grows faster because you're earning returns not just on your principal but also on previous gains. Think of it like planting a tree. Instead of cutting its branches, which is taking out profits, you let it grow freely. Over time, the tree gets bigger and provides more shade, just like your investment grows over the years. Now let us take a look at the key features of the growth option. Number one is no regular payouts. Your money stays invested and you don't receive any periodic dividends. Number two, higher capital appreciation. Since profits are reinvested, your wealth grows significantly over time. Number three, better tax efficiency. You only pay capital gains tax when you redeem the investment, not on yearly gains. Number four, best for long-term investors because it is ideal for those looking to invest for 5+ years without needing regular withdrawal. What is an example of the growth option in action? So this is an example. Let's say you invest 1 lakh rupee in a mutual fund with a NAV, net asset value of 50 rupees. So you get 2000 units of the fund. Over time, the NAV increases to 100 rupees because all profits are reinvested. Now your investment is worth 2 lakhs, double your initial investment. That's the power of compounding and reinvestment. Now let us move on to the IDCW option. So this option is previously known as the dividend option, allows investors to receive regular payouts from their mutual fund investment. But here's the catch. These payouts are not extra income. Instead, they come from the fund's profits and your original investment. Imagine you have a savings account and you keep withdrawing money. Over time, your total savings decrease. That's what happens with IDCW. The net asset value NAV decreases every time a payout is made. So some of the key features of this option is, first of all, regular payouts. You receive dividends periodically, which can be monthly, quarterly or annually. Number two, capital withdrawals included. The payouts reduce the NAV of your investment over time. Number three, higher taxation. IDCW payouts are taxed as income from other sources, meaning they are taxed at your slab rate. Number four, best for retired or income seeking investors, suitable for those who need regular income instead of long-term capital growth. One of the example of IDCW in action is, let's say you invest 1 lakh in a mutual fund with a NAV of 40 rupees. You receive 2500 units of the fund. The fund declares a dividend of 6 rupees per unit. You receive a payout of 15,000 rupees because 2500 into 6 is 15,000. But now your NAV drops to 34 rupees, reducing the total value of your remaining investment to 85,000. So while you received 15,000, your total capital shrunk. Not the best choice if your goal is wealth accumulation. Now that we understand both the options, let's compare them based on key factors like payouts, capital growth, taxation, investment horizon, and what is it best for. And you can see this comparison presented on the screen for you. You can gently pause for a moment and read about it. So now, as we have seen the comparison between them, now let us talk about taxation, which is a major difference between these two options. So growth option taxation is that you pay capital gains tax only when you redeem your investment. So if held for less than 1 year, your short-term capital gains tax, which is STCG, of 15% applies. If held for more than 1 year, your long-term capital gains, which is LTCG tax of 10% applies after 1 lakh exemption. So in IDCW option, taxation is payouts are taxed as income from other sources. So taxed as per your income tax slab, which could be 30% or more if you are in a high tax bracket. For high income earners, IDCW could mean paying much higher taxes compared to the growth option. So what is the final verdict? Between growth versus IDCW option, which one should you pick? Here's a simple way to decide. Choose the growth option if you're investing for the long term, like 5+ years, or if you want higher capital appreciation, or you don't need regular income from your investment and you prefer a more tax efficient investment strategy. Choose the IDCW option if you need regular income, example you are a retiree, or you're okay with your NAV reducing over time and you don't mind higher taxation on payouts. But want to know a smartest approach? Why not use both options strategically? If you're building wealth, invest 90% in the growth option and 10% in IDCW for some periodic income. If you're retired, reverse the ratio and invest more in IDCW and keep a portion in the growth option for long-term growth. So mutual fund investing isn't just about picking a fund, it's about picking the right investment strategy. Want to grow your wealth? Stick with growth option. Need regular income? Consider IDCW, but be mindful of taxes and NAV reduction. Still unsure which option is best for you? Click the link in the description to book a free consultation with a certified financial planner today. And don't forget to like, share and subscribe for more expert financial advice. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.